And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Chao by Liquidity Club. Today is the 30th of July, today is Sunday, the 30th of July 2023. I'll be doing the week review for the last week and for the upcoming week. So let's dive deep into it. Starting with the DXY, here we have the weekly chart. So last week we walked inside this weekly fair value gap and we walked inside this bearish order block. So and we've seen some good reaction here, a good retracement. So I'll be looking and monitoring how do we trade at this mean threshold of this bearish order block. If we violate it and go above it and close above it, I'll be looking for high prices reaching to this buy-side liquidity, this buy-side liquidity, and this buy-side liquidity, but mainly this low-hanging fruit buy-side liquidity. If we see some reaction from it and we start trading lower, I'll be looking for this fair value gap to be filled, as we formed relative equal lows here just at the fair value gap, so it would be a good starting point. And if we trade to it, I'll be looking if we accelerate through it, reaching to this sell side liquidity. Going to the daily chart, as you can see here, we have this high to this low. This would be a dealing range from this high to this low, so we're basically at equilibrium from that range, from this range. This is a dealing range and we're at equilibrium. And just for your info, when we're trading at equilibrium, it's expected to see some consolidation. So I'll be expecting some consolidation here as a choppy market, especially as we're entering August. As you know, August is one of the most low volume months of the year. It's where many of the trades will not pan out as you are anticipating or as you're expecting because of the low volume as we're entering the summer months. So that's pretty much it for the DXY. As I mentioned, I'll be looking how we trade to the mean threshold of this bearish order block, especially because we're now walking inside this weekly fair value gap. So it's a very important times. So if we trade above it, violate it, we're looking for higher prices. If we respect it and start trading lower, I'll be looking for this fair value gap. And if we accelerate through this fair value gap, I'll be looking for this sell side liquidity. Going into the ES for the September month contract, and it is spelling by ESU 2023 for this year. So last week, as I mentioned in the last weekly review, I would want to see price trades to the consequent encouragement of the last week's trading, and we in fact did reach to it and we closed above it. So this is a good reaction that I would have seen. We still have this fair value gap and this proposal block. Why is this a proposal block? Because we have a bullish order block here and we have another down close candle here which has a higher high than this bullish order block. So this would be qualified as the bullish proposal block. So price can retrace to this fair value gap or to this proportion block and complete further higher. Notice that this is also a buy side liquidity, or we would add as a draw or liquidity, which is the rejection block. This would be a rejection block. You notice how price trades higher here, opened here, and trades lower. So this is a good reaction point. We could see some reaction. So this would be considered as a draw liquidity if we start trading lower. And obviously, if we accelerate through it, I would look at this consequent encouragement of this wick and the buy side liquidity eventually. Going to the daily chart, as you can see, this is the bullish order block, trades higher, seeing some reaction. We have the volume balance, filled some of it, we're respecting it. No candles, no no candle bodies were below it, so just wicks. And as you know, the wicks do the damage, the bodies tells the story. So basically here, if you would view it without the wicks, you would see that the bodies are respecting it pretty much wonderful. And then we traded higher. We had this small fair value gap which trades to the consequent encroachment of it. Then trade higher, start consolidating here. We have a good spike here, good run to the upside, and we're back into the range. As you can see, we formed relative equal lows here, and we took them. So this is a very good thing that we took this sell side liquidity, and we worked inside this down close candle. So I'll be looking for the, as I've mentioned, for the as I'll be looking for next week if we trades higher, reaching to the strong liquidity, which is the rejection block, and the SPY side liquidity. So I'm still looking for higher prices in the ES. And if we can see some retracement to these levels, which are the fair value gap and the bullish proportion block. Going into the NQ, we're using the continuous contract because on this month's contract, which is September, there is not much enough data that we could be using to look at the history, and we can get more data to look where prices wanting to go. So looking into it, as I mentioned also for this index, we would want to see the consequent encroachment, and we pretty much we reach to the consequent encroachment, as you can see here. And you can, don't take my words for it all the time, you can go to your charts and you can see it. And you can see, in fact, if you measure this high to this low of this wick and you get the consequent encroachment, which is the midpoint, you see that we reached to the midpoint of that wick. So we traded, as you can see, we walked inside this weekly fair value gap, and we actually didn't walk in this bullish proportion block, but we walked inside this fair value gap. What does this shows you? Notice that if you on the video, and you can see the ES, we formed a higher high here. ES took this high, whereas the NQ failed to take this high, and it formed a lower low compared to the last week, but it took the consequent encroachment. So this shows us that the leadership is now transitioned, as I've mentioned already in the previous weekly reviews, that the leadership is now issued to the ES. And if you want to look for higher and more explosive moves, you'd be trading the ES. Why is that? Because for the previous months, for the previous year, previous weeks, we've seen this run in the NQ faster than the ES and the Dow. So the NQ was the leadership here. After it reached to these levels, now the leadership is transitioned to the six sisters, which are the NQ, the ES and the Dow, so they can catch up with the Nasdaq or the NQ. So this is what we're seeing here. We can see a very, if that's the case, we can see very lethargic moves to the upside in the NQ or consolidation. So we've seen here some lethargic move to the upside. We can also see some consolidation. Going to the daily chart, as you can see, we walked inside this fair value gap to the bodies are respecting it. You can see some whipsaw, that's fine. Bullish upside. We had a discount wick, consequent encroachment. Notice how we respected to the tick. We run it up higher. This is a weekly fair value gap. We walk inside of it. The wicks are working inside of it, and then we run it up higher. This is the consequent encroachment from the weekly chart. And notice that we have here a fair value gap, and we're working inside this fair value gap. So I'll be looking for next week. We trade above this fair value gap and we close above it. Once that happens, I'll be looking for price to return to the high of this fair value gap and potentially looking for longs, taking this buy side liquidity. So if price trades higher and close without taking this buy side liquidity, and then the next day would trade lower to the high of this fair value gap and trade to the high of this fair value gap, I would be looking for longs, reaching to this buy side liquidity and to the other buy side liquidity, to this buy side liquidity. This is the last week high, so I'll be looking for the consequent encroachment of this fair value gap, the high of the fair value gap, and this buy side liquidity if that scenario panned out in the chart. Going to the Dow. Now, if you can see the difference, because now I'm using the continuous contract for the Dow, because if you can go back to the last weekly review, you can see that we swept all the buy side liquidity, which were here, and there was not much enough data to look at. So now we transition to the continuous contract on the Dow. And as you can see here, we had a buy side liquidity and we swept it last week. And this last up close candle is a bearish order block. So if you extend it out in the future, you could see that we've seen some reaction from it. So now we have this fair value gap and we have this bullish order block. I'll see if we can trade, and we've seen some support at the high, consequent encroachment, or the low, or if we trade slower, respecting the bodies, respecting the fair value gap, and wicks are trading to this bullish order block, that can potentially send us higher to this fair value gap. I really like this little inefficiency that we can fill in the later weeks, or the consequent encroachment of this premium wick and the buy side liquidity. So this is my expectation for the Dow. Even though I'm not trading it, I'm just using it as a parameter, and I'm just measuring how it's the order flow with the other indices. Going to the daily chart, as you can see here, we swept the sell side, formed a bullish breaker. We had this volume imbalance. We filled it perfectly. As you can see, the bodies are respecting it. No bodies are closing below the volume imbalance, and we traded higher. We have this bullish breaker, the weekly fair value gap, and now we're trading here. So if you can see, if you take this low to this high, we're pretty much at the premium. So we might trade to the bullish breaker just to offer discount, so smart money can accumulate longs and trap retail going shorts, thinking that price is going to be dropping for the future weeks. I'm gonna show you how we traded. As you can see, this is the order block that I'm highlighting here, the bearish order block. On the 5-minute chart, as you can see, when we traded to the bearish order block, we've seen some good reaction to the downside, creating a market structure shift to the downside, and this resulted in a fair value gap. And you could be arguing that this is also a bearish breaker. So we have a high, low, higher high, lower low. So we have here a bearish breaker. And then price later in the time retraced to this fair value gap and started trading lower and reached this strong liquidity, which is a previous day low. This is more context behind it. This is the same fair value gap, but now it's zoomed in just to show you more info. You have these measuring gaps, the breakaway gap. Once we traded away from this area, this consolidation, we traded away, and we don't want to see this gap or this fair value gap. It's a fair value gap, but it's classified as a breakaway gap. We don't want to see price trades to it. It can partially fill it, but we don't want to see it fully filled. And if it does that, this doesn't change my bias, or doesn't change my narrative for how price is going to be reaching for this draw liquidity. So this is showing you the reaction after we traded to the weekly bearish order block. Price broke lower, creating the market structure shift with a fair value gap during the New York AM session. As you can see, during the New York AM session, we broke lower. Later during the day, specifically during the New York PM session, price repriced to the fair value gap and started breaking lower, reaching to the drawn liquidity previous day low, which is right there. And during the last hour, we formed the low of the day, excuse me. We formed the low of the day during the last hour, which is expected. Going into the Euro USD, also known as the fiber, this is the weekly chart. As you can see here, last week we walked inside this fair value gap. We traded to this bullish order block. So I'll be still monitoring how we trade at the consequent we trade at the main threshold. Remember, for the order blocks, breakers, all these blocks, the midpoint is called mean threshold. For the gaps, remember wicks are gaps. For the gaps, the midpoint is consequent encouragement. So as you can see here, we traded to this bullish order block. Actually, we didn't trade to it. We fell perhaps 2 or 3 pips short from reaching to this bullish order block. But nevertheless, we traded inside this magic zone of this bullish order block. And I'll be looking how we react here. I'm still favoring the buy side liquidity here. There are so many liquidity resting here. Which kind of liquidity? The deep pockets institutions liquidity. It's not you or my liquidity. It's the big boys liquidities here is resting. So they're most probably gonna reach to this buy side liquidity to liquidate them and engineer their liquidity into the marketplace to utilize it. Going to the daily chart, as you can see here, this is the weekly fair value gap. This is the bullish breaker. You have a low, high, lower low, higher high. We choose the highest up close candle as the bullish breaker, and as you can see, price traced lower. Notice how we're respecting the fair value gap. The bodies are respecting it. Just wicks are trading inside this bullish breaker. So I'm still favoring high prices. I would see some reaction. Obviously, if we trade lower than this low, if we trade lower than these low, I might look for lower prices reaching to this sell side liquidity, the consequent encouragement and these lows. But at the moment, I'm still favoring the buy side to be swept or to be reached at the moment, especially right now after we traded to this bullish breaker and how we're respecting the fair value gap here, the weekly fair value gap. As you can see how the bodies are respecting it. So I'm still favoring the buy side here. Going into the pound USD, also known as the cable. This is the weekly chart. As you can see, last week it's pretty much was indecisive. We've been trading inside this bullish order block, and previously we walked inside this fair value gap perfectly and we traded higher. We still have this buy side liquidity, so I'm still monitoring how we trade the mean threshold of this bullish order block. If we trade and close below it or below this low, are we looking for lower prices? And this will change the whole narrative for me. So I'll be looking for lower prices for the later weeks. If not, I'll still be looking for this buy side liquidity to be reached. Remember, we don't try to pick tops in buy programs. So now we're now in buy programs. As you can see, down close candles are being respected as support and up close candles being swayed through. So this is a bullish institutional order flow. Vice versa for bearish, but as you can see here, we have a buy program. So in buy programs, we never pick tops. So I'm not gonna pick the tops. So if we break this below this low, I'll be looking or questioning if we're still gonna be looking for higher prices. If it's heavy, so this will change my bias and narrative for the upcoming months. So I'll be looking for lower prices below these lows. There's sell side liquidity, and the consequent encouragement here. Going to the daily chart, as you can see, this is the same, the weekly bullish order block. As you can see, trade lower. We've seen some retracement to the consequent encouragement of this fair value gap, and we traded lower. We're still working inside this fair value gap. We swept the low, so we might see some reaction to the upside. So I'm still monitoring how we trade, especially at the mean threshold of this bullish order block. So I'm still indecisive, especially if you couple this with the DXY, with my point of view for the DXY and how DXY would like to trade. So I'm still indecisive for the Forex market. However, for the index, I'm still looking for higher prices on the ES, NQ, and perhaps the Dow. NQ is not really preferred for me because uh, the leadership is now in the ES and the Dow, especially because NQ has shown us the explosive moves in the previous weeks. So that's pretty much it for this weekly review. I hope you learned something from it. And I would also note something else, that next week we have a non-farm payroll on Friday. So it's really important to be careful, extremely careful when you're placing trades. So you'll be looking to turn off and stop trading by Wednesday New York AM session and resume by next week, or perhaps after non-farm payroll at New York PM session if you'd like. And other thing, that August, we're now entering the August. Now we finished July and we're entering August. August is one of the low volume months, so your trades might not reach to the drawn liquidity that you expect. So always aim for the low hanging fruit. Don't try to overextend your drawn liquidity, especially now in this month. And if you'd like to take a vacation, it's the best month to take a vacation. That's pretty much it for this weekly review. I hope you learned something from it. And until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.